Introducing a new era for discerning Australian investors. Brought to you by Ausbiz and backed by deep market insight, professional analysis and a proven track record. Our focus is simple: to connect you with exclusive and compelling investment opportunities. Discover what's next at ausbizcapital.com.au. This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. So let's check what happened overnight. And global stocks rising. European stocks, they ended higher as investors were buoyed by easing Eurozone inflation, potentially paving the way for further rate cuts there. Investors on Wall Street focused on positive jobs data in the absence of any developments in the trade and tariff front. And the major indices gaining, with mega-cap tech stocks doing the heavy lifting, led by Nvidia. Chipmaker Broadcom hit a fresh record high after the company said it had begun to ship its latest networking chip. And shares of Wells Fargo were trading higher after the market there closed, with the US Federal Reserve announcing the bank will no longer have to operate under a $1.95 trillion asset cap the regulator imposed in 2018. Shares of Kenvue dropped. It makes consumer health products, saying that retailers in the US and China are destocking products due to uncertainty over tariffs. And Dollar General shares surged as the discount retailer raised its annual sales forecast after surpassing quarterly sales expectations. While Pinterest shares rose as JP Morgan raised the stock to overweights. Reddit fell after the social media platform suffered an outage, and US listed shares of BHP and Rio fell, tracking copper prices lower as factory activity in China missed expectations. Well, US job openings increased in April, but retrenchments also increasing at the same time, a sign of a slowing labour market. Job openings rising 191,000 to close to 7.4 million. In other data, US factory orders dropped sharply in April, falling 3.7%, with commercial aircraft orders plunging more than 50%. Meanwhile, the Trump administration reportedly wants countries to provide their best offer on trade negotiations by tonight, our time. This comes as the president is due to sign a directive to double steel and aluminium tariffs to 50%. In fact, he has just done that. And longer-dated US Treasury yields dipped as investors awaited updates on tariff talk and budget negotiations. The yield on the 10-year at around 4.45%, the 2-year at 3.97%. The US dollar, it's rebounded from a 6-week low against the euro as Eurozone CPI data in May fell to 1.9% year on year, with the core inflation rate falling from 2.7 to 2.3%, and the Aussie is trading at 64.6 US cents. Bitcoin over 105,000 US dollars. On the commodities front, oil prices have climbed to a 2-week high amid an escalation of the war between Russia and Ukraine, while the US looks set to keep sanctions on Russia and Iran in place for longer. Also, wildfires in Canada affecting production there. Brent crude futures rising 1.5% to $65 a barrel. Copper's little changed, as is iron ore, which is at $97 a tonne. And the gold price has fallen from a 4-week high, with US gold futures 0.5% lower at $3,377 an ounce. So let's get across what we're seeing stateside. John Blake joining us from Zacks Investment Research. John, welcome back. Good to see you. Of course, perhaps a time to look back in May, and we've said this in the last couple of days that if you had taken that adage of sell in May and gone away, then you would have missed out on some significant returns. How are you seeing it? In fact, I see that Zacks is out with its second quarter and revenue growth estimates. What are you anticipating?
Andrew, second, third, and fourth quarter estimates, whether you look at revenue growth or earnings growth, are all down tracking to 5 or 4.5% annualized numbers. And to give some shape to that, the first quarter was a 12% earnings growth rate. So that is a material evidence, if you put 2.5% out there as a core PCE rate, that basically 1.5% to 2% growth for the second 3 quarters, or the 3 quarters that remain of this year, including the second one, is what to expect. And, Andrew, I looked at the GDP growth rates from the OECD this morning that came out, and from private consensus, and that's basically what it is: 1.2, 1.5% for the U.S. economy this year. So the only thing that's tricky here is the GDP now numbers for Q2 are over 4%, because the consumer is kind of following in the footsteps of the inventory building of the businesses and starting to spend it in front of tariffs that they may or may not get. So it's getting to be this confusing story. Like you put out there, sell in May and go away. Yeah, in general, that would be true, unless on April the 2nd, you had Liberation Day tariffs taking down the world economy, and you rallied back to basically getting flat for the year through May, because the president basically chickened out. So what does that tell us? It tells us, Andrew, that how you tell the narrative tells you a lot about what political group you join in the United States. Since I'm not a Republican, I can tell you that the year-to-date return for the S&P 500 is 1.5%, which is not great. And the actual other story within that context is the Russell. Small caps are still lagging this year. And that's the real story of the tariffs, is that if we're going to get a blowout in job numbers, it's going to come from small and medium-sized businesses that cannot afford to pay the tariffs for the things they bring in to run their businesses. So that's also tariff-like. So again, a lot of what's happening now is, populist news cycles, or people who are speaking in a partisan manner about, their belief systems, as opposed to, the breadth of the data.
Well, what are you seeing on the economic front? I just mentioned those jobs numbers, but also factory orders. And of course, that is clouded by what we've seen, I guess, with companies trying to front load ahead of those tariffs.
That's it, Andrew. I mean, let's talk the ISM manufacturing PMI that came out a day or so ago, and that was 48.5. I mean, it is under 50, but the general truth of these types of things, Andrew, you got to get deciles of 5, like you got to get to 45, not from 50, to actually see a material decline in US GDP growth rates. So what I would tell you is it's just another one of these tepid, measures. It's telling you that people are basically sitting around and waiting to see what's going to happen. And I don't know if that's bearish or bullish. It's just the uncertainty of the moment, and the moment's getting, turning into months of time, and months of time will ultimately turn into years of time. So, Jerome Powell himself does not have a very good read on this. And if he doesn't, I don't know if you or I should.
All right. Well, where are you seeing the opportunity right now then, John, in terms of, when we take a look at equities?
Yeah, Andrew, I put, my usual 3 number 1 picks up and sent them up to you. The first one I like is Carlsberg, the Copenhagen-based brewery with 500 brands. This isn't a story of where, you're going to get, if the European Union, after the pause, starts to retaliate, they're going to take on bourbon and spirits and ship in some wine from the United States, and that's going to make Carlsberg the play. So Carlsberg is a classic story. You can see the chart here has been slowly, people have been building positions and rallying, and it's pretty cheap. So, as a play in Europe that's probably not, well looked at yet, Carlsberg would be a name I'd throw out there.
All right. I see another one you're looking at is Fox Corporation.
Fox Corporation. Look at this, yep. Andrew. This gets to populism and Republican media performances and what's driving it. You can see that, you could bought this stock at basically just above $25 a share before the election. Now it's over 50, and you can see all those green arrows is beating with earnings. So that means the corporate advertisers are following their way into Fox News and Fox Sports and other parts of that media conglomerate, and it's working. So that's the real story of the Trump administration. It is, it's a corporate administration with groups that are, feeding on the access to power. And this is a material event. You can see in the chart yourself, this has literally doubled the shares of this stock in a year.
All right. And thirdly, Fortis, which is the electric power.
Right. This is a Canadian group, hydropower and other power up in Canada. And what you got to remember here is, again, look at this chart coming off the lows in January. It's now rallying in the face of the uncertainty and the attacks the United States president has put upon Canada. And actually, it's causing a rally in domestic utilities like Fortis. And you can see it's a material fundamental event because there's actually rises in earning estimates 4 to 5%. Not huge, but you can see them in the 25 and 26 charts there. And that's telling you that not only is Canada, getting more domestic in its energy use, but also data centers might find their way up there because they can get cooling better as well. So this is kind of one of those stories that you got to wonder if this is, like Vistra Utilities down in Texas, this may be the way to play the data centers in Canada when you've got support from the government and you've got, naturally cooler air and in a chart that's telling you that it's actually working already.
John, what's your view on the US dollar, where it's tracking at the moment? I guess particularly that correlation in commodities with both oil and also gold.
Andrew, I mean, it's a little premature. People are saying, we're not going to be the reserve currency of choice and all that stuff. I mean, I recall, the euro being 104 back in February, and now it's 114 and 115, which it's been there before, Andrew. So it's range trading more than anything. It's definitely not moving in concert with oil, but I would tell you that's because of sanctions, and the same way that gold is rallying because of sanctions is being kind of a trade that you can get in on as a central bank in North Korea or in China or Russia or wherever that, Iran, and put it into gold and not US dollars and get around sanctions. So it's very murky to me because sanctions and a lot of positioning and ranges is clouding this, thematic outlook that, we're not going to be the reserve currency of choice. That's way too premature for this situation. We've been with this president, 4 months, and it's yet to play out that, particularly the legal system up here, whether he basically ends up, getting beaten by the legal system, and none of this really makes a bit of difference.
Well, you get the sense that he'll find a way somehow around that. John, always great to catch up. Thanks for joining us on Zacks Investment Research.
You bet, Andrew.
Let's come back home. Looks as though we're going to start positively. SPI futures indicating that at least, but they are up around 0.25%. We're going to get right across that when we get underway in just a couple of minutes' time.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.